The June FOMC minutes land at a particularly important moment for markets, not only because investors are trying to assess whether the Fed is moving closer to another rate hike, but because this is the first full readout of a meeting chaired by Kevin Warsh. At the June meeting, the Fed left rates unchanged, but the updated projection showed a clear hawkish shift, with officials divided between holding steady and raising rates again this year. That makes the minutes important for understanding whether the pause was a genuine holding pattern or simply a delay before renewed tightening. The key question is how much the minutes reveal about the internal debate. The discussion to show a committee wrestling with whether policy is restrictive enough at a time when inflation remains too high and geopolitical risks have complicated the energy outlook is going to be in focus. The phrase to watch is whether many officials saw a case for hikes or whether most were prepared to tighten again if inflation continues to surprise to the upside. But there is another layer to this release. Warsh has made clear that he wants the Fed to speak less and guide markets less directly. The June statement was shorter, stripped of forward guidance, and his press conference avoided giving investors a clear policy roadmap. So the minutes may be revealing less for what they say and more for what they choose not to say. For markets, the risk is two-sided. A more detailed account of hawkish disagreement could lift treasury yields and the dollar while weighing on equities and risk assets. A thinner, more opaque set of minutes could leave investors with fewer answers, but may still reinforce the idea that this Fed wants markets to focus less on guidance and more on incoming data. The bottom line, today's release is not just about July rate odds, it's also an early test of the Warsh Fed's communication regime. Markets are looking for clues on inflation, the balance between hikes and patience, and whether the Fed is becoming a less predictable institution at exactly the moment investors want more clarity. That's all for now.